If you were following the price of the precious metals over the past week, then you know it has been a roller coaster ride of volatility. Early in the week, the gold price surged to record all-time highs, but the rest of the week was characterized by a major sell-off in both metals, gold closing the week down around 21 bucks, whereas the silver price dropped almost 6% over the course of the week. So right now, the big question is, where are the metals headed next? Clearly, this market is at an inflection point, and the moves this coming week are likely to be big, but will they be to the downside? Are we going to see this sell-off continue, or will we get a reversal? Will a rally resume? Are we going to get new all-time highs for gold and new higher highs for silver? And to get a little clarity on this issue, I wanted to examine some of the factors that were driving the price action in the metals earlier this week. And also, I thought it would be a good time to use an artificial intelligence tool to assess these markets and see if it can help give us any insight into what is coming next for both gold and silver. I want to say a big thank you to everybody for tuning into today's video. If you enjoyed the video, please do give it a big thumbs up down below and consider subscribing to the channel. Now, let's get to it.
The worst day on Wall Street since the crash of 1987.
We're now down 43%.
This could be the most serious recession in decades.
Protect your retirement with gold and silver IRAs. Learn more at sdbullion.com/IRA. So the first thing we need to take a look at today regarding the recent price action in gold and silver is this, the CME FedWatch tool. And this is a tool that gives us forecast probabilities for where the Federal Reserve will put interest rates. And you can see, according to this data for the September meeting, markets are pricing in nearly a 100% chance of rate cuts. Now, when gold was breaking out to record all-time highs earlier in the week, this number actually had gone up to a 100% chance of rate cuts. And there was a surge in the probability of rate cuts following a statement that Federal Reserve Chairman Jerome Powell made when he indicated that the Fed won't wait until inflation is down to 2% before cutting rates. He made these comments while speaking at the Economic Club of Washington, D.C., when he said that if you wait until inflation gets all the way down to 2%, you've probably waited too long, because the tightening that you're doing or the level of tightness that you have is still having effects which will probably drive inflation below 2%. And this seemingly dovish commentary from Fed Chair Jerome Powell had a lot to do with why gold was taking out record all-time highs. We can take a look at the chart of gold here, and you can see that on Tuesday, gold closed at $2,467.80. That's the highest price gold has ever closed at. Now, on Wednesday, though, things changed, despite the fact that on Wednesday, gold went on to make new record high intraday prices, getting as high during the day of trading as $2,488. It actually closed in the red that day, and that was the start of a major sell-off where we actually saw gold close the week lower than it had started it, despite the fact that it had hit record all-time highs. And it was a very similar story in silver at the beginning of the week. Silver performed well. It was up on Tuesday, the same day that gold was breaking out to new record highs. But then on Wednesday, things changed for silver in a major way. Look at this red candle here. And it just got worse as the week went on, with silver closing the week down almost 6% from where it started. One of the primary catalysts for this decline in both metals, especially in silver, that many analysts have pointed to is the fear of an economic slowdown globally, but more specifically in China, because early in the week, China released GDP data, very disappointing GDP data. It came in at 4.7% growth for the second quarter. That was against forecasts of 5.1%. And this put a lot of downward pressure on commodities across the board, in large part because China is a major consumer of all these raw materials. So if their economy slows down, then there's going to be less demand for gold, for silver, for copper, for petroleum, for all of these raw materials. Another factor that is exacerbating the fears of a Chinese economic slowdown have been comments earlier in the year from former President Donald Trump. He says that if he gets back into the White House, he is considering the idea of a 60% flat tariff on Chinese imports. This is a policy that UBS has forecast could cut the growth rate of China in half. So the big question here is, what is the bigger driving factor? The fear of a global economic slowdown or the promise of easy money from the Federal Reserve? Now, that is a question that time will tell. We'll have to see what happens with the metals here, with gold and silver. I mean, certainly the markets do appear to be at an inflection point. If the price of gold or silver does fall, I think that's actually a good thing for stackers, because it means we'll be able to buy more metal for a lower price. But if you're a short-term trader, or maybe you need to sell your gold and silver, something that many stackers have been doing lately, and stackers who have been squeezed by inflation, that could be a problem. Now, to give us a little clarity on this question, I thought it could be helpful to use an artificial intelligence to examine these markets. The AI that we'll be using today is called ChartEye. It's a plugin for the Google Chrome browser, and unfortunately it did not want to play well with the gold chart, but this is what it had to say about the daily chart of silver. Here, the AI gives us a quick summary of data just regarding price and volume, but what we really want to pay attention to is this trend analysis. And based on the data provided, this is what it had to say. The price has experienced a recent downturn from the highs around $32. The MACD histogram is negative, indicating that there is bearish momentum currently. The moving averages in the MACD are showing a recent bearish crossover, further confirming the bearish outlook. And based on this bearish analysis, the AI is actually recommending shorting the price of silver from here. But interestingly, it notes that for those shorting the market, a stop loss should be placed at $30. So what that tells us is that should we see the price of silver rise back above $30, then that is an indication that the bearish case may no longer be valid. And then also, the AI recommends a take profit level for a short at $28 and then $27 for more aggressive traders. And I think the way that we can interpret that is that should this sell-off continue, $28 and $27 are going to be levels of significant support, and $27 is probably about as low as we are going to see a sell-off go. So in the short term, the AI appears to be decidedly bearish on the price of silver, but I thought it would be interesting to also have it take a look at the weekly chart, a longer-term chart that goes back several years, and see what its interpretation of the long-term trend for silver is. So this is what the AI had to say about silver's weekly chart. And the overall sentiment for this chart is a bit different. It says that this sentiment appears to be neutral to slightly bullish. The price is currently in the middle of a pullback after a strong uptrend, and the MACD supports moderately bullish momentum. The existing resistance level at $32 is critically influential in determining the next trend move. So that's what the AI has to say here. It also actually recommends, interestingly enough, entering right around where the price is today with a target at $32. Now, again, I'm not giving any financial advice, but it is interesting that the long-term chart is telling the AI to go ahead and initiate a position right where we're at. And when it comes to the moves this week for both gold and silver, I do believe that the factors which are driving the bulls here, the promise of easy money from the Federal Reserve, is likely a more important fundamental factor than any fears about a global economic slowdown or an economic slowdown in China. And that's why I personally will be viewing any decline that we do get in the coming weeks as a buying opportunity to stack physical metal at a discount. And it appears from where I am at that the long-term bullish trend for both gold and silver remains intact. But let me know what you think. Leave a comment down below to let us know where you think the price of gold and silver are headed from here. Are the prices likely to crash? Is this sell-off going to continue? Or do you think that we have seen all of the red? Let me know in the comments down below. Stay safe and happy stacking, everybody. Smart Silver Stacker out.